Hello everyone. So welcome to economics class of CMA Foundation. So first, we will understand what is there in your syllabus, and then we will start with the first chapter. So this is for CMA Foundation. If you see, this paper is divided into two sections. So the first section is your economics, that is fundamentals of business economics, and then the second section would be fundamentals of management. So I will be handling fundamentals of business economics for you all. So in this fundamentals of business economics, that is your section A, we will understand what are the, first we will understand what is there, what are the chapters which are there in your syllabus, and then we will move on to the first chapter. Okay, so the first module or first chapter is called as basic concepts. Okay, so here we will be learning about what is economics, what are the definitions, so and central economic problems, then theory of production, theory of cost, demand, supply. So all these things we will be learning the fundamentals in your first module or the first chapter, that is basic concepts. So coming to the second chapter, that is second module or second chapter, it is forms of market. So regarding the various forms of market, so you would have heard of perfect competition, monopoly, monopolistic, oligopoly. So that means how many sellers are there in a market. Depending on that, we will say whether it is a monopoly market, monopolistic market, perfect competition, what kind of competition, what kind of market we are surviving in. In order to understand that, we need to understand the forms of market. Then coming to the third module or the third chapter, it is money and banking. So we will be learning about how a bank functions. So what is money, its types, features, functions, then banking, about commercial bank, central bank, RBI, all these things we will be understanding in the third chapter or the third module. Then coming to the fourth one, that is the fourth module, it is economic and business environment. So that is about see, the first thing what we will be learning in this module or the fourth chapter is, see, first what we have to understand is a business cannot function in a vacuum. Correct? For business needs, it's like how we human beings, we have our own environment, same like that only. Even the business functions in it is surrounded by its own environment. So see, political environment we are having, then societal environment, then technological environment. So many environment are there that is surrounded by a business. So which by looking at all those environments, the business will function. That is, if there is a sudden change in the technology, you should always be aware of your technological environment. So you should be aware of the political changes which is happening, how is our economy. So all these things you should understand. So just like that, I can't take some business decision and start doing the business. So it is like, when you are doing the business, you should be knowing in what kind of environment you are in. So business cannot function in vacuum. It is surrounded by its own environment. So those things we will be learning in our fourth chapter or fourth module, as given in your study material. So basically in this fundamentals of business economics, you are having 4 chapters. So first one is basics, then we have market, then we have banking, money, and then we have business environment, economic environment and business economic and business environment. So these things we will be learning, and I will be handling section A, that is business economics part for you all. So with this introduction, we will start with the fundamentals of business economics, first chapter or the first module, that is basic concepts. So mainly if you observe in this chapter on this module, mainly we will be learning about demand, supply, then theory of cost, theory of production. So before getting into the actual chapter, we need to understand what is this demand or what is supply or what is economics. Correct? No? So these 3 main areas we will be focusing in this chapter. So first we have to understand what is economics. Why we need economics, what is economics, what are the definitions of economics, and then we will be going to demand and supply. So demand is from the point of view of a producer, manufacturer or a seller. Correct? No? So now I have manufactured this pen. Okay, this pen, I should be knowing what is the demand. See, simply if I manufacture 1000 units of pens and keep it, nobody is there to buy. Then what will happen to my stock? What will happen to my investment? correct, no? So everything will go in vain. So that is why as a seller, first I need to understand what is the demand for my product. Whether if I produce or if I sell the product, if I take it to the market, whether there are people who are ready to buy it. So that demand analysis we will be learning. Okay, so that is from the point of view of a seller. So how many people are ready to buy, so that I have to understand. So that is what is there any demand. Then regarding, so the demand, it's not only understanding demand. Okay, people are ready to buy 1000 units of pen, but can I supply it? Can I supply? Demand is whether buyer is ready to buy. So as a seller, I should understand demand also. As a seller, I should understand supply also. And as a buyer, if you are a buyer and I am a seller, you should also be knowing about the demand and supply. So then you can understand, okay, when demand is more, usually the price will be less. So when like that, so that demand and price always will have an inverse relationship. So all these things as a seller or as a producer, if I analyze, then I can decide on how many units I have to supply to the market, what is the demand for my product, how many people are ready to buy. If I supply to the market, how many people are ready to buy. If there is nobody, not even a single buyer is ready to buy, then what will happen to my demand? So nobody is ready to buy, then there is no demand only. Without understanding the demand, if I simply supply 1000 units of pen, everything will go in vain. So that is why in order to understand that, we need to understand the theory of demand and theory of supply. So that will be anyway in detail when we go to the chapter we will understand, but just I am giving you a brief idea about it. Okay, that is about demand and supply. Then theory of cost and production. So cost and production is basically theory of production. What we are learning is, we will for 1 unit of input, see, production is basically what you will be using inputs and you will be manufacturing the output, or you will be producing the output. So it can be anything, so it can be providing of service or actual manufacturing. Like for example, if you are a chartered accountant or a company secretary or a CMA. So if you provide services to your clients, they will give you raw data, you will prepare financials, or you will prepare a certificate for them and you give it to them. So all these are what you are taking some input and you are producing an output. So this is about production. So in theory of, if you understand or if you properly apply the theory of production, what happens, for less input your wastage will be reduced and efficiently you will be producing, and without much wastage your output will be maximum. That is what we are understanding in theory of production. So theory of production is nothing but 1 unit of input should yield you maximum possible output without much waste. See, I can't tell there will be no 100% no wastage only. That is not possible. Okay, 100% no wastage is not possible, but there should be a minimal wastage. Efficiency should be increased. So that is about production. Input and output relationship, what we will be understanding, that is about, that is a production. And then theory of cost is related to how much, because see, simply without analyzing my cost, simply I will manufacture something, I'll produce some pen or some laptops, and I have incurred like crores of together cost, and tomorrow when I sell it in the market I am getting in thousands. And what is the use of doing the business? Correct, no? So I am not earning anything, rather instead of earning something I am losing. So this should not happen. So if you understand the theory of cost, you will understand in producing a product or a rendering of a service, whatever, how much cost is involved. There is fixed cost, there is variable cost, there is semi-variable cost. So what kind of costs are involved, and how much, what is the per unit of price, if I charge, what is the price if I charge, what is the amount I am going to get, or what is the cost I am going to cover, how much profit I am going to get. See, for example, if my cost is 10 rupees, without properly calculating the cost, if I sell the pen for 8 rupees, then what is going to happen? I am incurring a loss of 2 rupees. So if I properly analyze and understand the cost theory, it helps me in fixing the price and getting a proper reasonable amount of profit. So that is what we all want. No, simply doing the business and incurring losses, nobody wants. So cost is basically that, understanding how much cost is involved, for producing a product or for rendering a service. What kind of costs are involved? Some are fixed, some are variable, some are semi-fixed or semi-variable. So what kind of cost is involved? So if I analyze and understand for manufacturing a product or for rendering some service, how much cost or what cost is involved, easily I can fix the price, so that I can add a reasonable margin of profit, and then I can fix the price so that I won't incur losses. So for understanding all these things, we need to understand theory of cost. So these things we will be discussing in the first module or the first chapter. So with this introduction, we will start with the first one, that is the fundamentals of economics. So now first one, what we have to understand is what is economics. See, before getting into what is given in your study material, first thing what we have to understand is why we need economics. What is the reason why we have to study economics? That is, always remember, as human beings, our wants are unlimited. Our wants are unlimited, but to satisfy the wants, the resources whatever we are having, that is always limited. See, if take for example, it's your birthday. Okay, today is your birthday. So your parents have given you 5,000 rupees gift. Okay, so you have, today is your birthday. So your parents have given you 5,000 rupees gift. So in this 5,000, what and all you can think? First thing, a small trip you can plan, correct? Or you can take your friends to a good restaurant, or you can buy some clothes, some shopping for yourself. So all these things, you immediately you get the idea of all these things, correct? No, so you can go to a trip, go on a small short trip, or you can go to a restaurant, you can go and buy clothes for yourself. So many are there, correct? No, but you are having only rupees 5,000. So in this, what we are doing is, see, all the three you can't satisfy, correct? No, so if you are having 5,000, either you can go for a trip, or you can buy clothes, or you can go for a dinner, or maybe one or two wants you can satisfy. Maybe you can go for a dinner and buy some clothes. All the three definitely you can't satisfy within 5,000 rupees. So now what does it mean? That means, as human beings, our wants are always unlimited. Even instead of 5,000, even if your parents give you 50,000, then also you will be having so many other wants. You want to buy an iPhone for yourself, correct? No, so then that whole 50,000 will go. No trip, nothing. You will buy a phone. So you will buy a phone. So in this situation, so just this is a simple situation wherein now what we will do, or what you will do, you will prioritize everything. Now only you can't satisfy all the wants, correct? No, so you will prioritize. If you need clothes, you go for it. Or you want to go on a trip, maybe you have studied like for since 6 months you are studying day and night, like 10 hours, 12 hours you are working hard. So you want to go on a trip. Okay, that you can do it. Okay, so but the thing is, you can't, one thing what we have to understand is, all the wants at a time you can't satisfy, correct? No, so now what you will do, you are prioritizing. Okay, we will consider priority. First priority is your trip. Okay, first priority, you want to go on a trip. So now this is your first priority. So how did you understand this is your priority? So this is what, in this 5,000, this is what I have to do. So because you can understand the situation, and you can analyze, and you can prioritize the things. So now you have prioritized, and you said, okay, in this 5,000, first let me go for a trip. After that, in the next birthday or something, we will think about other needs or other wants later. So this is what is your planning, because your resource, that is the money what you are having, that is limited. Money is limited, but the resource is limited, but the wants are unlimited. So the same concept our economics will teach us. So at the nation's level, or maybe at your production, maybe manufacturing unit, or maybe when you are rendering a service. So whether at your professional level or business level or in the nation's level, this is what economics will teach us, because daily we are doing this economics only. We may not know this is what is economics, we will not know, but that is what we are doing daily. Correct? Now daily we have limited resources. Daily we will think, okay, first we will do this, first we will spend on this, and later we will think of the other things. Correct? So this is what economics is all about. So always two points what you have to remember in case of economics. Why we need economics means always our resources are limited. Whatever you do, how much ever you earn, your resources will always be limited. Nobody will tell, okay, I am having so much of money, okay, then now I will sit and happily relax and I will only spend, and whatever wants I am having, I can satisfy all my wants. Nobody will tell that, nobody can say that, because always as human beings, one after the other, our needs or wants will increase. It will never decrease. If you have a small house, you want a bungalow. If you are having a bungalow, you want another one. Then after all those things, you want luxury cars. So like that, one after the other, your needs keep on increasing. It will never decrease, or it will never be satisfied. One after the other, it will, again and again you keep on getting those needs and you have to satisfy. To satisfy, we need resources, which is again limited. So this is what will happen, and this is what we are learning, like, to prioritize. What is priority? Okay, within the available resources, first which need I have to satisfy. So this is what economics is teaching us. So in day-to-day life only, if you observe, I will be applying economics, you will be applying economics. At home, your mother will be applying economics, but you actually don't know that is what is economics. Correct? No, we will not realize this is economics, but that is what we are doing. So that is only economics. Now we will understand what is economics. Okay, so economics is one of the social sciences. It explains about the economic activities of a man. An activity which is related to earning of the money and spending of the money is called an economic activity. So what is an economic activity? Economic activity is nothing but it tells you about earning of money and spending of money. That is what is an economic activity. Otherwise, see, if I am rendering services like a charity, that is not an economic activity. So economic activity means you are talking in terms of money. You are working, you are earning money, and you are spending it. So that is what is an economic activity. So almost all people are engaged in economic activities because they all want to earn money. Correct? No, 90% of the people will be engaged in economic activity, except the children and the retired officials. So otherwise, everybody will be doing everybody will be interested or involved in an economic activity, because everybody is having limited resources and unlimited wants. So the main economic problem is to transform the society's resources into consumable commodities by using productive technology. So it is a problem because why this problem arises? Because human wants are unlimited and the society resources are limited. So basically what we are doing, we are understanding the society, okay, what needs they are having. According to that, I will produce something and I will give it to the society. They will, they will earn, they will buy. So this is how the cycle goes on and on and on. So all these things, why I need to use societal resources and why I need to produce something or render the service, all these things why we have to do, because as I already mentioned, human wants are always unlimited, but the resources available are limited. See, just imagine there is no exchange value, there is nothing called as money. Okay, whatever you want, everything is available in nature, like water, air. For air, nobody is giving money. Correct? No. So, for like water or air, if everything is available in nature, you need not spend even a single rupee. Whatever you want, it is available. Then why do you want to learn economics? Just think the other way around. Human wants are limited, but the resources are unlimited. In that case, we don't want economics only. Why we need to prioritize things? Why we need to tell, okay, this one after the other we have to spend? Nothing. All these things are not required. Whatever you want, the moment you think it is available, you go and buy it. then we don't want economics. Economics is all about, learning, prioritizing things and spending properly. So all these things, why it will arise, why we need economics is basically as human beings, our wants are unlimited and available resources are limited. That is why all this, we need to learn. Otherwise, economics is not required only. So it is a problem because human wants are unlimited and the society's resources are limited. So the main task of economics is to decide how much of which commodities are to be produced for the optimum satisfaction of human wants. So for proper satisfaction of the human wants, what resources we have to use and what production we have to do. What is that we have to manufacture, how to satisfy the human wants. That is what our sellers or our producers, sellers, everybody will be always thinking about that only. Correct? Now if you see in the market daily some new 10-12 products will come. That is in India I am telling. So if you just observe, daily minimum 10 new products will be introduced. Minimum 10 new products will be introduced. Why? Because they keep on analyzing what is the wants of the human beings as of now in this area, in this particular country or in this locality, what is the need and what they want. Okay, accordingly I will give, so that they will buy. Correct? No? So this is about a human want. So the firm and households are the basic economic entities in an economy, and the firms are production units and households are consumption units. See, there is two things. One is called as production units and one is consumption. So production and consumption means, production units are the firms. That is, firm means the the production units. The production units or the firms means it is the like the sellers. Okay, who are ready to give the products to the buyers. So they are the production units. That part of the society is a production unit, that those who are ready to satisfy our wants. So we go and buy and consume those products. No, so we are the households, we are called as consumption units. See, if there are only production units, then there is no economic activity. Everybody is producing, nobody is there to buy. Then where is the economic activity? Correct? No, there is no economic activity, and everybody is consumer only, nobody is there to produce. Then where is economic activity? So to balance the economy or to properly carry out the economic activity, both are equally important. Producers are also required, consumers are also required. Without producers, consumers can't do anything. Without consumers, producers can't achieve anything. So they are called as production units and consumption units. So these firms buy different factors of production such as machine, labor, raw materials, etc., and produce and sell different types of products and services. So the main aim of these firms is to maximize their profit. So mainly production units, what is their main aim is what? They are to maximize the profit. That means, see, now I think I am a producer, I am a production unit. Okay, now I am getting 10 rupees for a product. Okay, I am getting 10 rupees for a product. So my aim is always, what will be my aim? Okay, assume 8 rupees is my cost of production. So 8 rupees is my cost. Okay, so now my profit is rupees 2. Okay, per unit profit is rupees 2. So now what I will be thinking, always what I will be thinking is how to increase this. 2 rupees I want to make it as 3, 3 I want to make it as 4. Correct? No, so I will never be satisfied with whatever profit I have. I always want to increase. So what I will do, I will try to bring in new techniques of manufacturing, some new advanced machinery I will buy, or maybe I will employ more and more skilled laborers. So all these things I'll do, and I will try to always maximize my profit. So that is what they say. So what we do as a production unit, we will use men, machinery, raw materials, etc. Correct? No, so to produce, it is not just if I have one big machinery, that itself is not sufficient. To operate, I need men, people I need to employ, and I need raw materials to convert the raw materials into finished product. First I need raw materials. No? So raw materials are required, machinery is required, people are required. So if all these things are present, then I can manufacture the goods and give it to the society. So those consumption units, that is the households, they will buy, they will consume my product. As an as long as they keep on buying my products, I keep on getting my profit. And I also try to improvise my technique or improvise my quality of the product, so that I want to increase the profit, maximize the profit. So mainly my aim is what? Maximizing the profit. So the households, what they do, on the other hand, they try to maximize their satisfaction from their consumption of the goods produced by the firm. So we are not simply as a consumption units, we are not simply consuming, we want to increase our satisfaction. Correct? No, we always search for a good product. So goods, more and more satisfaction if we get, we go for those kind of products only. Correct? No, this month I will buy some, I will buy a pen. So pen what I bought this month, I am not that satisfied. Maybe I will go for a good, better quality pen, so that I am more and more satisfied. So as consumption units or consumers, we go for more maximizing our satisfaction. So what you have to understand here is, as consumers, we are thinking about maximizing our satisfaction. Then as producers, they are thinking about maximizing their profits. So these are the 2 points of view. Okay, next we will go to subject matter of economics. So this is about just an introduction kind of. So now we will see subject matter of economics. So in economics, a want is something that is desired, but all desires are not economic wants. See this, while teaching, what I will do is, I'll just read out the important lines from your textbook, so that you will also be you can correlate with what I am explaining. So you can keep your textbook open and you can watch this class, so that I will read out and then I will explain. So if I go on explaining, you can't correlate with the book. So what I will do, the important lines, everything I will not read, but important ones I will read, and then I will start explaining. So if next thing is, in economics, a want is something that is desired, but all desires are not economic wants. So the desires which are achievable and they are covered by purchasing power are economic wants. See, this is important, purchasing power. So now we need to understand the term want in economics. Want according to economics I am talking about. Okay, want in terms of economics. So what is this want in terms of economics? See, we all know want means what? Something which we desire to achieve, or something which we want to get it. So that is a want. In economics, everybody will have hundreds and thousands of desires. Correct? No, I will have thousands of desires, you will have of desires, but economics will not recognize all those desires as wants. Why? Because in economics, want means something which you can achieve. That is, see, if you are earning 1 lakh rupees per month, okay, 1 lakh rupees if you are earning per month, you can have a want, like I want to buy an iPhone in the next month, or next 6 months I want to buy an iPhone. This kind of want you can have, because it is certainly it is achievable. If not today, next month definitely you can buy. Or you want to buy a car, okay, that is achievable. Or you want to buy a house, yeah, then you can go for a housing loan and you can buy that also. That means you are having that purchasing power, because you are working, you are earning, and you can do it. That is certainly it is achievable. So this is what is called as a want. But if I have a desire to go to space or moon, that is not achievable. Correct? No, so I have no knowledge about it. Simply it is just my desire, that's all, which I can't achieve financially, physically. I don't have any kind of knowledge, and we can't afford also. So now this want which I cannot achieve is not considered in economics. The want which can only be achieved, the wants which are achievable, that means you have desire also and you have the purchasing power also. If you want, you can do it. So those kind of wants are only wants in economics. So in economics, something which you are, which you yourself doubt that I can't do it, those kind of desires will not be considered as wants in economics, like going to space or going to moon, or like one day I want to become like Ambani. See, you want to become rich, fine, but you set the standard which is achievable. So something like this. Okay, see, I'm not telling nobody can, you can't achieve that standard, but I'm just giving you an example. So if you have a desire, if you have a want, that should be somewhat achievable. You should have the purchasing power. See, if you want to buy a car, okay, you want to buy a house, okay, you can buy. If you want to buy a phone, if you are earning that much of income, definitely you can buy. But if you want to go to moon, something which is not achievable for everybody, correct? No, so now that is cannot be achieved, and something which cannot be achieved will not be considered as want in economics. Economics will not recognize those kind of wants. Okay, it will tell no, I will not recognize, because only the thing which you can achieve, only those will be considered. Something which is not achievable, where you don't have the power only to purchase, simply I am having a desire. See, for example, I am having 100 rupees in my bank account, I want to buy an Audi car. That is definitely not possible. So now that is not a want, it is just my desire. Economics will not recognize at all. Economics will not recognize that. So that is want is a, so that is the want according to economics. So want is a starting point of an economic activity, correct? No, whatever economic activity you can think of, first starting point is want only. If there is no want and if there is no purchasing power, then that economic activity will not start only. So first thing, starting of any economic activity you take, that starts from want only. Want which is achievable, okay, a desire which is achievable is a want in economics. Otherwise it is not a want, not desire, nothing. Economics will not recognize. So what happens when you have a want? It will lead to efforts, correct? Want, when you are having a want, it will lead to efforts, and effort leads to satisfaction. So want is the see, first, now I am earning 1 lakh rupees per month. Now I have a want that I want to buy a car, a luxury car, which is achievable. So what I will do, I will put more and more efforts so that I will earn more, correct? When I start earning more, maybe something which I was supposed to achieve in 6 months, I will do it in 3 months only. So from the want we start putting the efforts. From the efforts we get the satisfaction. So I get money. When I put more and more efforts, I get more money. When I get money, I'll go and buy whatever I want, and I am satisfied. So whatever economic activity you take, that first starts from want. If you are 100% satisfied, you don't want anything in life, you don't want to buy anything, you don't, everything, whatever you want to have, then where is why economic activity? Why you need to sell something? Why you need to sell, or you need to work somewhere, earn money? All those things are not required only, no? So want is the starting point, so that you have to remember. So this is a subject matter of economics, and the subject matter of economics is divided into 4 parts. So we will see what are the subject matter of economics. See, mainly it is divided into 4 parts, but we have 7 points which is given. Subject matter, how economics is divided. First one is production, then we have techniques and technology, then we have exchange, distribution, value, price and consumption. So mainly 4 parts is production, then exchange, then distribution, then consumption. So these are the main 4 parts, but they have given it in 7 different points. So we will see one by one. Subject matter of economics means it consists of all these things: production, technology, distribution, exchange, distribution, value, price and consumption. So first we will understand what is production. Okay, so production is, in economics, production involves creation of goods and services. See, this is important, creation of goods and services by using resources. See, by using some resources you are creating goods and services. So what is that you are creating? See, so for example, first you manufacturing of maybe a pen. Okay, you are manufacturing a pen. So for that you need raw materials, you need people, you need required some decent machinery, and you need money, that is your investment. So you are using all these things and you are manufacturing or producing a pen. Okay, so next, when it comes to rendering of services, correct? No, services also you can render, like for example, if you are a professional, you are a lawyer, so you are working, now you are a lawyer, so you've got a case, a client comes to you and he tells you, explains you about the case, so day and night you sit, work hard, and you prepare for your arguments and you argue and you win the case. So this is, you are providing a service. So something you are, converting something, an input into output, or you are rendering a service. Rendering a service means, see for example, you are a doctor, take the example of a doctor. What a doctor does, so first when a person, any patient is admitted to the hospital, he is a patient, so the doctor will daily, he will give him treatment like for 3 days or 5 days depending on the illness. So after 5 days the patient will be discharged from the hospital, that means from illness he becomes a healthy person. So if the doctor charges money, that becomes a production only. So production, in economics, the moment I say production, don't get confused thinking that production is always converting input into output. So it need not be. So production involves producing of goods as well as services. So doctor is a good example. So ill person walks into the hospital and he goes out as a healthy person. This is a production, this is rendering of services. So production means something you are, adding value to it, or maybe you get a raw data as a professional and you convert it into financial statements and give to your clients, or you convert it into some certificate and give it to your clients. So all this is rendering of services, or you are a developer of an app. So all these are production only. So production is basically you are adding value to a product, or you are adding value to a resource so that you are getting money out of it. That's all. That is a production in economics. So you need not worry about services, whether service is a production, whether only actual production is a production. Everything is production only. So by doing something you are adding value, and for that you are getting money. That's all. That is a production. So you are using some resources, you are adding value to your inputs, and you are getting money for it. So output is something which is changed. Input was a raw data, you are changing it into a certificate. Yes, input was an ill person, you have given him medicines, he has become a healthy person. That is production. For that you are getting money. That's all. So you need not worry. So available resources you use. Like if you are a doctor, you use medicines, you use required, whatever treatment, like for some scanning or X-ray. So all these things, resources you use, and you give the treatment, and then you send a healthy person. So he walks in as a ill person, and now he goes as a healthy person. That's all. So that is a production. So it is a process to change the raw materials into final or finished goods. So it is nothing but creation of utility. So you are creating utility, that's all. That is a production. You are creating some, now I told you, you are adding value. Mainly you are adding value to it. So that itself is a production. So to produce anything, so many factors are essential. So all these factors are classified into 4 things. See, as it is, without using any factors of production, or without taking any of this help, whatever we see now, you can't produce anything. Okay, so land is required. That is, a land means a place. Okay, you think it as a place, that is required. Correct. Now whatever you do, you sit in a place and you do it. So land is required. Then labor. Correct, labor. See, I need not take anyone as employee. Maybe I will only work. I am working alone, but I am a labor. No, my labor I am putting, my efforts I am putting, my skill I am putting. So that is labor. So land required, labor required, capital, some amount of investment we need, and then organization. Bringing all this together. Organizing all this together. So that's an organization. So all these 4 must be present, and with this you can produce anything. So it can be production of a product, or it can be rendering of a service. Both are included in production. So basically what you are doing, you are adding value. So that is production, adding value, and for that you are getting money. Only this you have to remember, that is a production. Okay, so next we will go to technique and technology. Sorry. Okay, So the next subject matter of economics is technique and technology. So what is this? Technique is defined as the ratio in which inputs are combined together to produce one unit of a product. So technique is, see, for example, I want to produce a product, okay, I want to produce some spare parts of a car, okay, spare parts of a car. So for this I need 2 units of raw material, okay, raw material A, I need 2 units to produce 1 unit of B. So my final product is B. To produce 1 unit of B, I need 2 units of A. This is the technique. This is the technique. How much inputs, in what ratio, 1:2, 2:1 or 3:1, in what ratio you need inputs to produce certain amount of output. So that is your technique or technology. So technique is defined as the ratio in which the inputs are combined together to produce 1 unit of a product. So for example, if capital K and labor L are used in the production process, that is 1 unit of K is combined with 2 units of L to produce 1 unit of a product, that is K is to L is equal to 1:2. So how much of raw materials you use in order to get a product? So now I have just told you about a raw material. So here they have also used, capital, labor, everything. So like for example, A 2 units you need and 1 skilled worker unit, 1 skilled labor and 2 units of raw material A. So if you combine these two, you can produce 1 unit of B. This is my finished product. So in order to achieve this finished product, I need 1 skilled worker and 2 units of raw material A. So this is the technique. That means to achieve an output, 1 product, 1 output, 1 unit of output, what and all I require, how much capital I need, how much labor I need, or how much raw materials I need. So all these things is only called as technique or technology. So next one is, we will go to exchange. Okay, so exchange is when 2 individuals bring their product for trading purpose in the market. Such act is called exchange when trading is complete. In olden days, goods you exchange for goods, and which is called as barter system, but this system is inconvenient, and now exchange is through money. See, exchange is nothing but I am selling something, so I am selling some goods. So for that, in order to buy my goods, in exchange, what is that you are giving? See, if I am giving some goods for you, if I am giving some goods for free, that will not come in economics at all. Okay, so first you have to understand there is exchange value, money is there. Okay, because in olden days, if you see, there was something like barter system. Okay, I will give you 2 kgs of ragi, you give me 1 kg of rice. I will give you 2 kgs of wheat, you give me 1 kg of rice. So something like this. So this is barter system, which is not useful now, and I can't say it is not useful, it is not convenient, correct? No, because for we need thousands of product, correct? No, daily there are thousands and lakhs of product that goes to a market for buying and selling purpose. So now for each and every product, if you have to fix a value in a barter system, it is very, very difficult. It is not at all convenient, correct? No, so today I need one a toothpaste, tomorrow I need a soap, day after tomorrow I need something else. So for everything, if you have to exchange with some other thing, means it is very, very difficult for us to fix a price for it, fix a value to it. But if it's a money, we can easily, money is very good, the common medium of exchange. So if it is money, I can tell this costs 10 rupees, this costs 5 rupees, this costs 100 rupees, like that. It is very easy. So that is why now barter system is very much inconvenient, which we are not using. So we are using money as a common medium of exchange. See, whatever you want you buy, whatever you want you sell. Common medium of exchange, what is that you are exchanging for the product is money only. Medium of exchange is money. So So all these difficulties, we have come out of these difficulties with the introduction of money, and with the introduction of money as a common medium of exchange. So now if you see, money is a common medium of exchange, but before, when we had barter system, it was very difficult and it was very inconvenient, because to fix the value itself is difficult. See, now I can easily tell, because it is money, I can tell it is 15 rupees, it is 10 rupees, or it is 10,000 rupees, like that. But if you have to tell, like I have extra rice, like I have 50 kgs of rice, I want something, I want a phone, who will give me? How can I fix this phone is, which costs, this phone is equal to 25 kgs of rice. You may not need rice, no, you are ready to sell the phone, but you don't want rice. Now what to do? So this is, this was very much difficult at that time. In olden days, there was no common medium of exchange like money, but now that money is introduced, it is very, very easy for us to exchange. Everything has a value in terms of money. So that is one more subject matter. So if you observe, we have completed 3 subject matters. So the first one is production, then we have techniques and technology, then we have exchange. Now we will go to distribution. So distribution means sharing of income among the factors of production. So distributing is, you see, you have factors of production, no, that is land, labor, capital, organization. So organization, or you can consider it as entrepreneur. So if I start the business, I am the entrepreneur. So distribution is, see, now I have manufactured the pen and I have sold it for rupees 15. Okay, I have manufactured the pen and I have sold it for rupees 15. So now I have to, those who have worked with me, the workers' salary will go like 5 rupees, and the rent, I have taken a land or a building on rent, for that it will go like 4 rupees, and then some other machinery or something which I have taken, for that will go for 2 rupees. So 5 plus 4 is 9 plus 2, 11. So 11 is my total cost and my profit is 4 rupees. So this is what distribution is. So once you have completed the production and you have exchanged, that is, you have sold whatever you have produced, you get money. So that has to be distributed. It is not like you take employees, you take building or land on rent, everything you take, and happily full amount you will only enjoy. Tomorrow after selling, you will only enjoy the full amount. That is not possible, no. So what you have to do, once you get that money, like 15 rupees I told you in our example. So once that 15 rupees for pen I get, first I have to start distributing it among various factors of production. I have used that resources, I have taken their help, I have taken the employees' help, I have taken the help of my landlord by taking a building on rent. So all these things I have to distribute, I have to give it back to them, and after that whatever is left out, that profit, I will take it as an entrepreneur. So that is what distribution means. Distribution means sharing of income among the factors of production, and the total income which is generated by selling of these products, goods and services in the market must be distributed among the factors of production in the form of rent, wages, interest and profit. So that is, interest is if I have taken any loan, so interest I have to pay to the bank or any financier. Okay, so that later it is profit which I take it like an entrepreneur. So distribution can be of 2 types, one is micro distribution and one is macro. So that we will see later. Okay, as of now we will just understand that there are 2 types of distribution, one is micro and one is macro. Next we will go to value. So this is another important subject matter of economics. So we will understand this value. Okay, so value in our economics, if you see, there are 2 types of value, that is use value and exchange value. Okay, use value and exchange value. So now we have to understand what is use value and what is exchange value. First I will read it out and then we will try to understand what it says. Okay, use value is the capacity of want satisfying power of a commodity. Any commodity, what is a want satisfying power? That is its use value. Then it is the utility, or you can call it as utility or want satisfying power. Okay, the use value of water, it's its ability to quench a thirst. Exchange value is the ability to be exchanged for exchange for other commodities. So exchange value is, now we are exchanging in terms of money, no? So this is money. This is utility. Okay, you have to understand like this. Use value is the utility value, exchange value is the money value. So now what is this use value? See, when I am feeling so thirsty, okay, like maybe since morning I did not even get a single drop of water to drink, I am feeling so thirsty. So now if I get a glass of water, it is like, I can tell it's like worth 1 crore rupees. That much satisfaction. I'm not giving you 1 crore rupees. I'll tell, even if you give 1 crore rupees, I'll not get that much of satisfaction what I'm getting now by drinking 1 glass of water. That is the want satisfying power of a water when I am thirsty. But just now, I drank like 4 glasses of water. Again you get 1 more glass of water. That is not giving me any utility. That is not giving me any satisfaction. Correct. So there is no utility value. So use value means at that particular point of time, what kind of satisfaction a commodity is giving me, what usefulness or a utility my commodity is giving, that is use value at that particular point of time. So when I am thirsty, if you give me a glass of water, that is like, that use value is huge. But when I'm not thirsty, I'm already having 4 water bottles. On top of that, again 1 more water bottle if you come and keep it, that is not giving me any use value. Okay, so that is use value. That means that how much satisfaction at that particular point of time, what satisfaction it is giving you, that is use value. Next comes the exchange value. Exchange value is the amount what you get, or maybe like for example, now if I sell a pen, I will get 10 rupees, correct? No, that 10 rupees is the exchange value. So if I sell a car, I will get lakhs of together rupees, correct? No, so that is the exchange value. In economics, if you observe, what is important is exchange value. We are not bothered about use value, because for one person only, different points of time use value will be different. Or maybe if you take 2 different people, use value will be different. For same water bottle, if you ask me in the morning when I was thirsty, it was use value was huge. But in the evening when I'm already having 4 water bottles, again if you give me, use value is nothing. Correct. No, so that is why use value, if you see in economics, we will not consider, we will not give much importance to it. That means we will just understand the meaning, but we will not give much importance to it. But exchange value is what we give more importance. So exchange value is how much money in exchange, if you sell the product, what in exchange what you are getting. Okay, if you get more money, that means a product is having more exchange value. If you get less money, it is having less exchange value. Like for example, if I sell a pen, just 10 rupees, with 10 rupees what I can buy maximum a cup of coffee. Correct? No. So a cup of coffee I can buy. So it has a less exchange value. But if I sell a car, I will get 2 lakh rupees. Assume I will get 2 lakh rupees. So it has more exchange value. So that is the exchange value and use value. See, the same thing they have given example in terms of barter system, just for your understanding. Okay, so I'll just read it out. See, if 1 kg of rice is exchanged with 2 kg of wheat, so 1 kg of rice you give and you get 2 kgs of wheat, then the exchange value of rice is 2 kg of wheat, correct? No? So this is what I told in terms of money. This is what same thing I told you in terms of money, that's all. So 2 kg of wheat, if 1 kg of rice is exchanged with half kg of apple, then the exchange value of rice will be half kg of apple, and so on. That means if I sell a pen, exchange value is 10 rupees, means I will, by giving this pen, I will get 10 rupees. But if I sell a car, I will get 2 lakh rupees. That means exchange value is more. So in economics, we are mainly considering about exchange value, use value, exchange value, meaning we should know, but mainly we are considering about exchange value, because that is how we can calculate what is the value of a product. That is how we will calculate the value of the product, by telling, see, if you sell this product, this is amount you are getting. Okay, so that is important in economics, exchange value. So next we will go to price. So price of a commodity is the amount of money which is exchanged for 1 unit of the commodity. So price is amount of money, that we all know. So See, value we are calculate, how to calculate value is given in the previous point. Here we are mainly talking about price only. That means, so for a pen I will give 10 rupees, means that is the price of the product. Money, in terms of money I am telling this is the price you have to pay. In terms of money I am telling this is the price you have to pay to get a pen. Okay, price of a commodity is amount of money which is exchanged for 1 unit of a commodity, and it is the exchange value of the commodity in terms of money. This is what I told. Exchange value. Exchange value of the commodity in terms of another commodity may or may not change even if the price of the commodity changes. For instance, if both price gets doubled, exchange value between the two commodities will remain unchanged. If the price of other commodity does not change by the same proportion, the exchange value will of course change. So what does it mean? That means, see, for example, now pen is costing me rupees 15. Okay, pen is costing me rupees 15. So assume this pen you will buy from me and you will sell it for rupees 20. Okay, so now you will buy a pen from me for 15 rupees and you will sell it for 20 rupees. That means what? 5 rupees profit you are getting. 5 rupees profit you are getting. So now I'll give you another instance. Okay, now I increase the pen value by 20 rupees. You are buying for 20. Before you used to buy, earlier you used to buy for 15 rupees, but now I increase the pen value like 20 rupees. I have made it as 20 rupees. Okay. Then you are selling that pen for rupees 25 now. Did it change your profit? What is your profit? In the first situation, your profit was rupees 5. In the second situation, also your profit is 5. So sometimes what happens is, when the exchange value of both the commodities changes, that means what you are selling, what you are buying. So both the commodities, if the exchange value changes, then that means price is also increasing. You are buying by giving an increasing price and you are selling by charging a higher price. You are selling at a higher value, buying at a higher value. So exchange value will not differ. Correct? No? See, you have bought it for 15 rupees. You bought it for 15 rupees. You sold it for 20 rupees. Fine, you are earning 5 rupees profit. Now I increase the price of pen to 20 rupees. From 20, you are selling it for 25 rupees. Your profit remains unchanged. Even though there is a change in price, because selling price, buying price, both the prices are equally changing. So there is no change in the value or what ultimately what you are getting, that there is no change. But if there is a situation where I increase my price to rupees 16 and you are selling at 20 rupees only, that means your profit has reduced from 5 to 4. Your profit has reduced from 5 to 4. Here that there is a change. That is what they are trying to tell. So sometimes what happens is, both the selling, buying, everything changes in the same manner, then the exchange value ultimate effect will not differ. Same thing, before also 5 rupees profit only, now also 5 rupees profit only. That is not changing your position. Same profit you are earning. But the situation what I told you, just I increase the price but you did not, or I decrease the price, you did not. In this situation there is a change in the ultimate effect. So that is about price. Okay. So next we will understand something about micro and macro distribution. Okay, so next, micro distribution. So micro distribution is nothing but, so in pricing only we are understanding two things. Okay, micro distribution and macro distribution. Last one is consumption. Okay, so first we will see micro. Micro distribution means what? In pricing, micro distribution means what? Okay, so micro distribution is nothing but pricing of factors of production. That means it explains how price, that is rent per unit of land, is determined. In the same way, how price per unit of labor, that is wages, or capital, that is interest, that is determined, are discussed in this head. So Ricardian theory of rent, modern theory of rent, different wage theories, interest theories, profit theories, etc. are discussed. So this is nothing but micro distribution means see, now I am manufacturing a pen. For manufacturing a pen, I have taken a building on rent. So how rent is calculated? For this, only this business, how rent is calculated, how much I am paying, then how much I am paying to workers, wages, what I am taken loan, so how much interest I am paying, and at last how much profit I will get. So this is micro distribution. Okay, this is about micro distribution. So that only my business or my manufacturing unit, what is the factors of production, how I am distributing, how much rent I am giving to my landlord, how much wages I am giving to my workers, how much profit I am getting at the end of the day, how much interest I am paying on rent, if I have taken on anything, I have taken on rent or something. So all these things are considered in micro distribution. Micro means only a small area or only one business, okay, related to one business, particular industry, like that. So next we will go to macro distribution. Macro distribution means sharing of the total national income among total factors of production. That means we will come to know that whether income is distributed properly or not properly among the people. That means in micro distribution, we are only thinking about one particular industry or maybe one single manufacturing unit or one business. Okay, that is micro distribution. Okay, I have earned this much money. Okay, see, I have earned this much money, 100 rupees I have got. In that, whether I properly distribute it to everybody. See what happens now, if I earn 100 rupees, properly if I pay 20 rupees wages, 25 rupees rent, 20 rupees to interest, that is on loan, then remaining I will take it as profit, that is fine. But 100 rupees I earn and day and night workers are working in my office, and 1 rupee I will pay wages, 2 rupees I will pay interest, 3 rupees I will pay rent, remaining full 90% profit is mine only. This distribution is wrong, no? We will only understand which is correct or not. So this is from the point of view of one business, whether the distribution is proper or not. If you want to understand, we will go for a micro distribution. Whether I am properly giving salary to my workers, whether I am properly paying interest on the loan. So all these things you can understand when you go for a micro distribution, that is related to one particular industry or one manufacturing unit, like that. Okay, when you go to macro distribution, same thing, you are trying to understand from the view of the nation. Okay, the whole nation, how much money is earning, total income, national income, what is the total income of the country, in that whether it is properly distributed. Proper distribution, why you need to understand is, otherwise what happens if only if all the profits, assume if all the profits only owners will keep it, okay, only entrepreneurs will keep it, and just they are giving like peanuts to the employees, then what will happen? Then there will be no proper distribution only. Then what will happen? Rich is becoming richer because they are getting more and more profit. 90% profit with the entrepreneurs only 10% income people are getting. So this will constitute to 10% of our population. Only 10% of population, they are rich, they are becoming richer and richer, and these poor people, that is which constitute to 90% of the population, they are becoming poor and poorer. This should not happen. So in order to understand that, this macro distribution is very, very important. So you need to understand from the point of view of a nation, whether there is properly they are distributed or not. So that is macro distribution. From the point of view of the nation as a whole, we are trying to understand. So modern economists extended the subject matter of economics and they added some other concepts in different dimensions like employment, income, planning and economic development, international trade. So it's not only, you know, distribution of national income, they also modern economists, they also now concentrated in macro distribution or understanding the macro distribution. They also concentrated on employment, income, planning and economic development, international trade. So all these dimensions also we have to understand. So that is what modern economists are extending that macro distribution to various dimensions. Okay, you have to understand about employment in the country. You have to understand about the international trade, how business we are, whether we are getting good business from other countries or not. So whether our economy is developing, whether it's properly planned by the government. So all these things, national income. So proper dimensions our modern economists are telling, and to understand the macro distribution you have to see all these dimensions also. Okay, that is what our modern economists are telling. Next we will go to consumption. Okay, so next in consumption, the last one, that is the subject matter of in subject matter of economics, the last one is consumption. Okay, in consumption, it is an act of using the goods or services to satisfy the wants, correct? Now consuming is what? It is just your satisfaction, satisfying your want, that is consumption. So in economics, consumption is typically defined as the final purchase by an individual. Those are not investment of some sort. This is what is very, very important you have to understand, because consumption as it is, if I tell consumption, everybody will understand, correct? No, we will consume, that is consumption. But in economics, what is consumption is, that is a final consumption is considered as consumption. Okay, so it should not be any investment. That means see what happens is, now see, now for 15 rupees I bought a pen, and this pen I am writing notes, and I am writing notes, and you completely used that pen. My satisfaction, my want is satisfied. I wanted a pen to write notes, I have bought it and I have used it. That's all. This is what consumption. I am the ultimate person. From this, I am not passing it on to anyone else. So I am the ultimate consumer. I have consumed it. That's it. It's done. This is called as consumption. But if the same 15 rupees pen, if I buy and I am planning to sell it to someone else, like I want to sell it to someone else for 16 rupees, this is an investment. This is not a consumption. So in economics, what we have to understand is, consumption means the final consumption. From that, the utility or satisfaction of the consumer is done. Okay, I wanted this, I consumed it, that's all. So from this I am not going to earn anything, or this I am not reusing it, or I am not remarketing it, again selling it, nothing. I am not earning anything out of it. See, I have 5 lakh rupees, okay, in my account. If I keep a fixed deposit, it is an investment. It is not a consumption. I will be getting interest. That amount is like that only. I am getting more and I am increasing that amount. Correct? No, if I am keeping it as an FD, that is an investment. But that 5 lakh rupees I will withdraw from the bank. I will go buy all the necessary things like some a TV, laptop, a sofa set. Everything I will buy and I will clear. That 5 lakh rupees is gone. This is consumption. But if that 5 lakh rupees, if I invest in shares of a company or invest somewhere else or keep it as a fixed deposit, that is not a consumption. That is just an investment. Or that 5 lakh rupees, I will take it and I will start a production unit. That is not a consumption. So from that you are not doing anything else. That is where you put a full stop. You consume it, that's all done. That is consumption in economics. So through consumption, you have to understand the consumer destroys the utility of the commodity. So from once you consume, that commodity loses its value. Your satisfaction also you have got, and the commodity completely loses its value. See, I have bought a pen, assume there is no refill, nothing, just use and throw. I have used it completely, I have used it and I will throw it. This is consumption. But again, if it has some value, I will add value and I will make use of it again, means, or I will sell or do something with that. That is not a consumption, that is just investment, because you are trying to increase the value rather than using or destroying its value. So that is not a consumption. See, if someone buys a house to live in, that should be defined as a consumption. I bought a house, I spent money, I have bought a house, I am only living. I am not going to get any money out of it. I am living it. I am living in that. That's all. So that is consumption. But if anybody buys a house and gives it for rent, then that should be defined as an investment, because you are adding value to it. Your money, your value of that house, you are increasing day by day by getting rent. You are getting money out of it. So that means utility is increasing. So that is an investment. You should not consider it as consumption. Consumption means from that point onwards, the moment I say it is I have consumed it, from that point onwards there is no utility or value for that product. That is consumption. So similarly, if you buy a car to drive, that is a consumption. But if you buy a car to use it as a taxi for a business, that could be considered as an investment. So in short, the reason for the purchase determines whether something is viewed as an investment or a consumption. See, there can be we have seen same products, no, that can be used as an investment also, that can be considered as a consumption also. So depends upon for what purpose you have bought the product, we can decide later whether it is used as for a consumption or it is used for an investment. Okay, next we'll go to definition of economics. So next we will start with the definitions of economics. See, we have understood the meaning of economics, subject matter of economics. So these things we have understood: consumption, distribution, macro distribution, micro distribution, everything we have understood. Now we will go to, and economics to some extent, just meaning also we have understood. Now we will go to different definitions of economics. That means economists, that is those who are specialists in economics, they are called as economists. So these specialists in economics, they have given us the definition of economics. So meaning of economics, universal meaning one we have understood, that is wants are limited, wants are unlimited and resources are limited. So that is where we prioritize things and we take the decision. So that is where we apply economics. That is why we need economics. That is what is economics. This much we have understood, but definition we have to understand. So if you observe, there are many definitions. If you see, if you Google or if you check any book, you get so many definitions. But for the purpose of syllabus or for understanding properly, to get a proper idea about the definition of economics, if you go through these 4 definitions, that is more than sufficient. Okay, so you get a lot of definitions, there is no doubt in that, but these 4 are very, very important. So what are those 4 definitions? Who is given those definitions? So we will see first. See, we have 4 definitions. The one is wealth definition, then we have welfare definition, then we have scarcity definition, and then we have growth definition. So these 4 you have to learn. So we will see one by one. First we will go to wealth definition. So wealth definition is given by Adam Smith, who is called as father of economics. So almost all the classical economists followed wealth definition. So if you see in the olden days, everybody, that is classical economists, they followed the wealth definition only. So it is mostly associated with J.B. Say and Adam Smith. So wealth definition means we first get idea. We first understand about Adam Smith. Wealth means it is always we think of Adam Smith only. Okay, so Adam Smith is called as father of economics. So he is called as father of economics, and he has written a book, that is an inquiry into the nature and causes of wealth of nations. So that is 1776. So there are chances that you get the questions related to this book name and all those things. So that you have to remember the year, book, everything. An inquiry into the nature and causes of wealth of nation. So that is in 1776. So Adam Smith delinked the economics from political economy and he explained it in a scientific manner. So what is this delinked from de-linked the economics from political economy. What is this de-linked? That means, see, before Adam Smith gave any definition, people used to think that economics means it is only for political economy. Okay, so only those who are into politics, only they should know economics, only they should learn economics. Why we need? So that was the mindset of the people. Everybody used to think like that only. Okay, economics means it is only for politicians. Why we should bother? Then Adam Smith gave a scientific definition, or he de-linked. He said, see, there is no link for politics and economics. Economics is something different. Everybody needs, not only politicians and not only for those who are administering the country, those who are running the country, not only for them. Everybody needs economics. That is what Adam Smith told. So in a scientific manner, he explained what is economics. Everybody had that notion. Okay, economics means it is only for those people who are into politics, those who are politicians or those who are running the state, who are administering the state, only they should know. Then Adam Smith de-linked it. He said, no, what you are understanding is wrong. Everybody, be it a politician or a normal household, or maybe a person who is just an employee, whoever you are, you need economics. Economics is not only for politicians or not only for running a country. For everybody need, for everyone, they have to understand economics. They need to apply the economics. So that he de-linked and he explained the economics, or he gave the definition of economics in a scientific manner. So we will see the definition. Okay, according to J.B. Say, what he said economics is a study of science of wealth. And Adam Smith says economics is the science which deals with the wealth. So that means if you observe the definition of J.B. Say and Adam Smith, they both talk about wealth. So he says it's a science of wealth. He says it deals with the wealth, science which deals with the wealth. That means economics is all about wealth, according to Adam Smith and J.B. Say. So mainly it is wealth definition is by Adam Smith. We quote Adam Smith definition when it comes to wealth. So what they say is it is a science of wealth. So understanding about the wealth of a nation. So see, about everybody is for everybody wealth is important. No, it's not only for the person who is running the country. For you also need wealth. You also need money. I also need money. Everybody needs money. It's not that only for the politicians they need money. Correct? So it is about wealth. Everybody should understand. So that is what he said. Economics is the science which deals with the wealth. Economics is a science. See, it's in a scientific manner he tried to explain economics, and he said it deals with wealth. Okay, so according to the above definition, we see the definition only they have bifurcated into points so that you can understand it in a better manner. So we will see this is according to above definition. This is nothing but analysis of the definition. Okay, this definition whatever we have studied, it's a science of wealth or science which deals with wealth, both are one and the same, almost it gives the same meaning. So that definition they have given an analysis what exactly the definition means. Okay, first point, economics explain how wealth is produced, how wealth is consumed, how it is exchanged and distributed. So according to Adam Smith, first thing is you have to understand, economics is nothing but you have to understand how wealth is produced. First you have to produce wealth, you should have wealth, then consume it, how it is exchanged and how it is distributed. Okay, so that is the first point in definition. Okay, then according to Adam Smith, a man is an economic man, and economics is a science of study of wealth only. That means as human beings we are all thinking about money. We all want money. That is what Adam Smith said. See, economics is all about only money, wealth. That's all. According to Adam Smith, okay, only money, only wealth, achieving wealth, getting more and more wealth. So that is first you should have how your wealth is produced. First how to get wealth, then how to distribute, how to exchange, how to produce more and more wealth, how to consume it. So everything about money only. Okay, wealth is money. And he says man is an economic man. That means we are all, as human beings, any person you take, everybody is interested in money. Economic man. Okay, and he says It's so economics is a science of study of wealth only. Economics means it is only about wealth, understanding about wealth. That's all. Money, money, money. That's all. So that is what Adam Smith showed. This definition deals with the causes behind creation of wealth, and it only considers the material wealth. See, he is not considering anything else. He says how to create wealth. Okay. Then first, how to create wealth. Then how to consume. Okay, you created, you have to consume. No, okay. Then again exchange. Then you distribute. So that means whatever activity you do, whether you are rendering some services or you are working somewhere as an employee, you are working, okay, or maybe you are having a production or a manufacturing unit, or maybe you are rendering some service, you are a doctor or a lawyer, engineer, whatever, you are rendering some service. Whatever you do, everybody's main achievement or main objective is to earn money. That is what he calls it as wealth. So whether you are an employee in a company, or you are producing something, or you are rendering a service as a professional, whoever you are, whatever you are doing, man is an economic man. You are only concentrating on creating more and more wealth. And obviously you create, you consume, distribute, exchange, all these things is a cycle. But the whole cycle of distribution, creation, exchange, all these things is related only to money. As human beings, we are all interested in money. Economic man means what? Earning more and more economic wealth. That is what we are bothered. That is what we are more worried about. That's all. That is our objective. Economics means that only. Economics means that, and our objective is also that only, according to Adam Smith. And he considers only material wealth. See, material wealth means something like, money, your assets, your immovable property, movable assets. So all these are material wealth. So apart from that, we are having wealth, that is health. Correct? No, you would have heard of this. Health is wealth. Then happiness. All these things are also there. That is also a kind of wealth only. But Adam Smith did not consider all these things. He just said material wealth. How much assets you are having, how you are increasing that wealth, how you are consuming it, how you are producing it, only about that. So according to Adam Smith, economics is only about wealth, science of wealth. It is study of wealth, understanding about wealth, and what is that you are understanding in economics about wealth? What is that you are understanding about wealth? How to create, how to consume, how to exchange, how to distribute, again how to increase. Same cycle repeats: produce, consume, exchange, distribute. Again produce, consume. So that is what is a cycle, and the whole economics is only about wealth, material wealth, nothing else. He did not concentrate on anything else. So this was not accepted by everybody. So there is a criticism. Okay, there are criticisms about wealth definition. So people said, see, just wealth itself is not the achievement. Correct? No, you are having a lot of money, but there is no happiness, there is no health. What do you do? So economics is not only about the material wealth. So there is some criticism. So we will see the definition. This definition, that is only economics means it is only is equal to, according to Adam Smith, economics means money. Economics means wealth. That's all. Economics means money. So it's not actually that. It's something else. So that is why there is criticism with respect to Adam Smith definition. So we will see the definition was criticized by so many philosophers. So it's not only one or two. Many philosophers said, no, what you are telling, you are giving a wrong message to the society. Economics means wealth, economics means money, means it's wrong. Okay, so this was criticized, and there are Carly, Ruskin, Walras and Dickens and others. So many, many people criticized. In that few names they have given. According to the critics, economics is a decimal science and gospel of mammon, bread and butter science, incompleted science, etc. Wealth is of no use unless it satisfies the human wants. See, they said, see, this economics, what you are telling is not a proper science. It is incomplete what you are telling, because economics, if you tell only wealth, that becomes incomplete, because just if you are having money, or only you are achieving towards, only you are going towards achieving money or getting more and more wealth, then you are not satisfying, you are not thinking about what exactly people want. Correct? No, you should also think about human wants. See, for example, if I produce luxury cars, Okay, if I sell luxury cars, so I will get like 50 lakh rupees profit. Assume a car, one car if I sell, I will give 50 lakh rupees profit. But there are people who need education, who need health facilities, but everybody, economics means money, so everybody is concentrating only on producing, manufacturing luxury cars, selling it to rich people. How are you going to satisfy human wants then? If according to Adam Smith only economics means wealth means, everybody will think of increasing their wealth. Then when people need education facilities, when they need health facilities, health care, all these things will not be available only, because everybody is like, one car if I sell 50 lakh profit, two cars 1 crore profit, I will do that only, no? So when you are only thinking about wealth, where you are thinking about human wants, economics is about human wants also, no? It's not only wealth. So wealth is of no use unless it satisfies human wants. Everybody is having lot of money at home. No product what you want, that is not available only. You would have experienced this in COVID situation. You are having money, you can't go out, you can't buy whatever you want. And transportation facility is not available. You can't step out of the house. You can't buy even grocery. You have to go within the fixed time or limited period of time. You have to go, come back, buy whatever you want, necessaries, and you come back. So if this is the situation with just money, everybody is having crores of together in bank account, no satisfaction of human wants only, then what is the use of wealth? That is not proper economics. That is not science. Nothing. So that is what it was criticized. Don't give that kind of message to the people. It's not only wealth. So not only in terms of money you can tell economics means money only. Then what is the use? Human wants, how you are going to satisfy? So this definition is not of much importance to man and his welfare. So they said, see, welfare of human beings you have completely not considering only. As a human being, your welfare is also important, no? Your happiness, society, how the society is functioning, all these things are also important, no? When you are not happy only, you have a lot of money, what do you do with that? But if you see Adam Smith definition, completely it is not considering what is required for people, welfare, good of the people, good for the society, nothing. Just money. It's certainly concentrating on money. So that was the next criticism, that is this definition is not no much importance to it. This definition is not giving importance to human beings, only to money it is giving importance. Human being, his welfare, his health, what is good, what is not good, nothing, only money. So that is wrong. So that was criticized like that. Okay, next we have welfare definition. So this definition is given by Alfred Marshall. So he was a follower of Adam Smith. He wrote a famous book. He was also a follower of Adam Smith, but he did not completely accept what Adam Smith told. He wrote a famous book, Principles of Economics or Principles of Political Economy, in 1870. So in 1870 he wrote a book, that is Principles of Political Economy or Principles of Economics, both are the same. So he gave another definition of economics. So what definition he has given? He says economics is a study of mankind. See, understanding the human being itself is economics. Study of mankind in ordinary business of life, in the normal course of life, you are understanding the man, you are understanding his needs, you are understanding the society. That is economics, not just money. Okay, economics is a study of mankind in ordinary business of life. It examines that part of individual and social action. See, he is concentrating on the person. Okay, one second. So individual and social action which is most closely connected with the attainment and with the use of material requisites of well-being. So he is considering individual as well as social action. That means what is good for the society, what is good for a man individually, those things you have to consider. That is economics, not only money. Okay, so which mostly connected with the attainment and use of material requisites of well-being. That means, see, in order to get my welfare or well-being, that is, I have to be happy, I have to be healthy, that is my well-being. Whatever is good for me, that is my well-being. So for my well-being, whatever products I use, whatever the products I sell, I use, I consume, what that is economics. That means economics is going towards achieving the welfare of the people. That it's not only money. It's about understanding the man and understanding the society and achieving. See, whatever you want, you sell, you make money out of it. Alfred Marshall is not telling money you completely ignore. He is not telling that. But money is important, but not to that extent where you are only telling only money itself is economics. Economics should not be like that. So economics should be, you know, you for your daily business, your day-to-day living, you are earning, you are selling something, you are buying something, all those are fine. But ultimately economics means it should achieve the well-being of a person. That means whatever is good for the public as an individual as well as for the society. That is economics. So that means, see, for example, now I told you, no, we need education facility, we need healthcare facility, but I am only producing alcohol. So in this situation, what happens? Only alcohol, okay, alcohol or cigarettes, cigars, alcohol. So these things, I am only selling these things because I get more and more profit. This is not what economics is teaching us. This is wrong. Okay, this is not economics is teaching us. So this is wrong, and you have to think of what is good for the society. Correct, no? So if a person consumes alcohol or a cigarette, then that is wrong, that is not good for his health. So that kind of production we don't want, that kind of earning of money we don't want. You have to think, you give more and more education facility, healthcare facilities. Even if you get a little less money also, it's okay, but you are thinking about well-being of a person. That is economics. Attaining the well-being of the person is economics. So he's not telling money completely not required, only money is required, but money itself is not economics. Economics is mainly well-being. First, how you are achieving money or how you are getting that wealth. That should be for welfare of the community, welfare of the society, welfare of the public. So if it is not good for the public, and if I am simply selling alcohol and cigarettes and if I am making money, that is wrong. That kind of economics is not economics only. That is what Alfred Marshall says. So economics is a study of mankind in the ordinary business of life. It examines that part of individual and social action which is mostly connected, closely connected with the attainment and with the use of material requisites of well-being. See, you are using material resources, you are earning money, all these things I will also understand, it is important, I know. But economics is on not only without considering what is good, what is bad for the society. Simply earning money is economics, means everybody will produce alcohol, everybody will sell cigarettes and they will make money out of it. Or I told you, like luxury cars, when educational facility is required, that we will not give. Only luxury cars I'll produce, or only luxury goods I'll produce. I will sell in less quantity and I'll make huge profits and I feel happy. This is bad for the society, no? 90% of the people require education that I am not providing only. This becomes wrong. So that is not economics. Economics is not only money. Economics is something else. That is, you are earning money also. You are using material resources. You are using money. But how you are using money or how you are earning money is by keeping in mind welfare of the people. Whatever is good for the public, that you are doing. That is economics. So according to Marshall's definition, economics is one side study of wealth, on the other and more important side is the study of man or his welfare. That is what I told. Alfred Marshall did not tell full, you should not concentrate on money only. Economics is not money. He said yes, important, correct. Money is also important. Earning money is important. Getting more and more profit is important. Well, that is one part of the story. Another part of the story, or the important part of the story in understanding what economics is welfare of the people. Welfare of a man, what is good for him, what is good bad for him, what is good for the society, what is beneficial to the society, what is not, what is beneficial for an individual, what is not. Thinking that after that you produce, you earn money, that is okay, but without thinking that the important part only you are leaving, what is good for the society you are leaving, what is bad for the society you are leaving. You are not understanding that only about money. If you think, then you can't achieve. You can't achieve properly, and it is not economics. It's not proper economics. So that is what I told. So it's one side study of wealth, on the other and more important side is welfare. So now we will see what are the main points in this definition, analysis of the definition. How we saw analysis for Adam Smith definition, in the same manner we will see analysis for Marshall definition also. So first point is, according to this definition, economics is a social science. So it is not a pure science, it is a social science. Then according to this definition, goods are classified into two categories, that is material and immaterial. See, material goods is which earn money, like so that material goods is like the jewelry what you buy, or a house or a car. So all these are material. Immaterial is your health, happiness. So what is good practices? So those are immaterial. So according to Marshall, economics is a normal science. Okay, the top priority is given to man or welfare of man, and second priority is given to wealth. See, normative, there are two types of sciences. One is we have positive science and one is normative science. Okay, so in positive science, if you take, what happens is, it just says this is what it is. 2 plus 2 is equal to 4. That's all. You can't change it. Correct? No. So that is what I can see. If you ask me what is 2 plus 2, I can't make it, I can't change it to 5. If you want to make it as 5, that is not possible, because it is just cause and effect. 2 plus 2, 2 into 2 is always 4. It cannot be made as 8, or it cannot be made as 5, or it cannot be made as 3. That is not going to change. That is positive science. As it is, I am telling, this is what it is. Normative science or a normal science means what happens, I will tell this is how it is, but we can make these changes so that we can achieve this. I need not accept as it is. Okay, I will tell the changes. I will tell yes, now as of now it is like this, but we will make some changes and we will reach there. That is normal or normative science. So according to Marshall, he says economics is just not understanding exactly whatever is given. No, economics tells us what is good, what is bad, how it has to be, how it is now, how it has to be. Okay, that is economics. So not like what Adam Smith said. So the top priority he has given to welfare of the human being. Okay, after that, wealth, money you can earn later, but first you have to be, your health, your happiness, your welfare is important. That is what Marshall said. Then the Marshall enhanced the status of man from economic to social man. See, if you observe, Adam Smith said man is an economic man. That means you're only, as a human being, only thinking about earning money. No, Marshall said no, he is a social man. He thinks about society. His well-being is important. Correct? No, we are not machineries. We are not machines simply to work like input output. No, it's not like that. We are human beings. We have feelings. We need to understand what is good for us, what is bad for us. So it's a social man. So economics is related only to some material goods which promote human welfare. See, whatever material goods or whatever money you are talking about, everything should lead to welfare. That is economics. If that is not giving welfare, only about money and something, see, I have lot of money, but that money is bad for the health of the people. Something I'm manufacturing something, I'm producing something which is creating bad effects on the health of the people. Then that kind of money is, we don't want. That is not economics. Economics is use material resources, earn money, but keep in mind welfare of the people. What is good for the people, what is not good for the people. So that is economics. But if you observe, our Marshall definition also has a lot of criticism. So we will see that what is the criticism. So criticisms, the first one is, this criticism is given by Lionel Robbins. Okay, so what are the grounds on which he has criticized? First one is, according to Robbins, welfare definition is an incomplete. So he says it's not complete only. Okay, according to Robbins, economics must be neutral between the ends. So what is neutral between the ends? Neutral between the ends means you should think of scarcity. That means you see always our resources, if you observe, it is limited, and our wants always it is unlimited. Correct. No, so our wants are always unlimited and resources are limited. So if you are only thinking about, you know, welfare, or you are thinking about wealth, but you are not talking about any limitation, there is limitation, no, there is scarcity, that you are not talking about it. They are not talking about it. How, what are the things which you can achieve at the end, what you can reach, what you cannot reach. So you can't, you're not telling that, you're not talking about that. You're only telling about welfare. Okay, welfare is fine, wealth is fine, everything is fine, but you should also talk about scarcity. No, that is incomplete. You're not talking about that. Wants are always unlimited. As human beings, our wants are always unlimited. Everything you can't satisfy with the limited resources. Say if you are having unlimited money, so you need not have any money in bank account. Simply you go to ATM, you can withdraw any money, any amount of money. Then okay, fine, whatever you want you can buy. There is no problem only for people. But here it is not that case, no. So here, as the resources are limited, economics should also talk about it. Economics should think, economics means it is also talking about unlimited wants and limited resources, but no definition is talking about that. So Robbins told this is incomplete, and Marshall neglected some material goods which do not promote human welfare, but these goods are also produced, exchanged and consumed. So they come under subject matter of, so they also come under the subject matter of economics. So see, for the purpose of welfare, for the purpose of, you know, good of the people, you know, people consume so many things which is actually not good for the health. Okay, so that Marshall did not talk about it. Marshall only said happiness for a person, happiness for the society. Okay, see, for example, if I consume alcohol, if it gives me happiness, that is my welfare, that is my well-being. Daily I need alcohol, then only I feel happy. That means, is it correct? You are only telling welfare. See, in example I told you, like alcohol or educational facilities, first we have to select about educational facility. This is example I told you, but Marshall did not tell all these things. No? Marshall only told whatever is good, whatever gives you happiness, that you do. Happiness, alcohol also gives me happiness. You did not talk about it. Something which is not good for the society, something which is bad, which is having a bad effect on the society, those things can also be consumed, like drugs, narcotic drugs. Yes, it gives people happiness. Those who are addicted to it, it gives happiness to them. So what do you do? What explanation you give for this? What answer you will give for this? This is what Robbins, you know, criticized on these grounds. Okay, next we will go to like cigarettes and alcoholic products. Okay, next we will go to scarcity definition or Robbins definition. So our Robbins, he criticized and he gave his his own definition, one more definition he gave. So we will see what it is. So this definition was given by Lionel Robbins, and he wrote a famous book. Again, all of them have written books, so you should remember the name of the book. He wrote a famous book that is an essay on the nature and significance of the economic science. So that is in 1932 he wrote the book, and he has given the definition. So we will see this, what definition he has given. So economics is a science which studies human behavior as a relation between ends and scarce means which have alternative uses. See, he has told about all these things. So what is that? First, it studies human behavior. Okay. Then, as a relation between ends and scarce means which have alternative uses. What is this alternative uses? That means, see, for example, if you take milk, 1 liter milk you buy, from that you can make curd, or you can drink as it is, or you can make some sweets, or so many other uses, just 3 uses I have written, but apart from that so many other uses are there. So out of this 3 uses, just take alternative uses. You can, same milk people are using for different, like if there are 10 uses, okay, people are using it for all the 10 uses, only one product, that is milk. Now economics will also tell you like what is that you want to achieve. When first thing is wants are unlimited, you have unlimited wants and resources are limited. and you have all this resource. First of all, first resources is limited, and on top of that, all the resources are having alternative uses. So milk, some people want to drink it as it is. Same milk, some people want to make it as a sweet, make it sweet out of it, or some people want to make it as a curd. So same product has our alternative uses. So economics should tell you choice. It should make you understand, prioritize the things and choose what exactly at this point of time what you need. That is what economics should tell. Not about only wealth, not about only welfare. You should mainly talk about scarcity here. Nobody is concentrating on that. That is what Robbins told. Nobody is concentrating on scarcity. That is what is very, very important at this juncture. Correct? No? So you are not concentrating on that. That is what Robbins told. So you have to concentrate on wealth. Sorry, you have to concentrate on scarcity. So what is that scarcity? Who is creating that scarcity? Is resources. See, we have unlimited wants. If you give me a packet of milk, I tell you 10 items which I can do from that milk, 10 things how I can use that milk. But one packet of milk cannot satisfy all the wants, no? So the resource is limited, plus the resource is also having alternative uses. This nobody thought about it. Correct, no? So that is what Lionel Robbins said. See, economics is a science of choice. You have resources which is limited, plus those resources are having alternative uses, and we have wants which are completely unlimited. So by keeping in mind all these things, economics should help us to prioritize things and help us choosing what is required, what is not required at this particular point of time. See, everything everybody will require, but at this particular point of time, what is important, what is not. So that is what economics should tell. This is what he told Robbins. So economics is a science. It's a science which studies human behavior in relationship between ends and scarce means. Okay, end and scarce means which have alternative uses. So that means what he says, wants are unlimited, so resources are limited, alternative uses is there, and there is a problem of choice. This is what economics should teach us. Then what are the merits of this definition? What are the advantages, or what are the good points, positive points about the definition? First one, according to this definition, economics is an analytical science and it turns into economics turns into universal science. So analytical science, according to this definition, if you see, economics becomes an analytical science. Analytical science means what? You are developing an analytical mind, you are analyzing things. Okay, you are actually analyzing things, and you analyzing things and you are prioritizing after analyzing. Okay, now I have one packet of milk, I will analyze what I have to do. So first, okay, only anyway one packet of milk for the whole day. So first I will convert it into curd, and then if there is anything left out, I will drink it as it is, I will consume as it is. So this analysis which based on this definition only, it gives us an analytical science. It gives us analysis kind of, my analytical mind. We can analyze, we can choose. Okay, at this particular point of time, this is what is available. So and this has a lot of uses. Which use? What shall I do? So that is analytical science. And it turns into economics turns into universal science. That means this is universally applicable. Everybody, correct? No, whether you are in India or in Japan or in America, wherever you are, for everybody this is the same rule. Resources are limited, wants are unlimited, and each resource is having alternative uses. So this is a universal science, and according to Robbins, it is a positive science. Positive science means what exactly what it is I am telling. Okay, economics will not tell you what ought to be, so how you have to change, what you have to do, no, whatever as it is we will understand. And then neutral between ends. Okay, just a second. So neutral between ends. Neutral between ends means it is a human wants. End is a human want, what you want to achieve. Okay, human wants and they are unlimited. So that is neutral between ends. Neutral between ends is human wants which are unlimited. They are unlimited in number and they are human wants and they are unlimited in number. So that is neutral between ends, and you have to choose. You have to choose which want I have to satisfy first. So these are the merits. Okay, when you go to criticism, this Robbins definition also has criticism. So we will see what are those criticisms. So first one, it is not universal science. According to Robbins told, it is universal science. Okay, everybody will accept, but other economists, they can criticize, no? So they said no, this is not applicable everywhere. This is not universal science. Then it is not applicable to developed countries. So for developed countries, this they have all the resources. Why they have to worry? Something like that. Okay, so they said it's not applicable to developed countries and not applicable to communist or dictatorship countries. Communist or dictatorship country means every single decision is taken by the government only. So like dictator, okay, whatever they say, like Hitler, whatever they say we have to follow. So there is no decision only. See what I have to do first, what I have to do next. That everything government is deciding or our ruler is deciding. We have no option only. We have no freedom only to think. Then this is not applicable. No, for those kind of countries it's not applicable. And it's not applicable to developing countries like India. In India, it is like more, it's just now it's developing. So you can't think about resources, wants, unlimited, all those things. People are having limited wants only in India because it's still developing, no? You can't have huge wants when you are not earning only much. Then how can you have so much of wants? So for a developing country or already developed country, both it is not applicable. Then it is your same thing, you are telling it in a different manner. That's all. That is old wine in a new bottle. There is no, we are not finding anything interesting, anything new, no interesting or anything new we are finding. That's what it was said. And it also neglected the dynamic concepts. So because of all these things, see, just a second. So it ignored or neglected dynamic concept. Dynamic concept means, see, you can always bring in change. It need not be static, like how production technique was 50 years back or 20 years back. Same thing we are not following now. Correct? No, there are so many changes. So in the same manner, we can bring in changes and we can make same resource. Maybe available resource is same, but we can from the same resource, instead of satisfying one want, you can satisfy two wants. That is possible. So why do you not concentrate on dynamic concepts? So that means more modern techniques if you introduce. Same, like for example, by using 1 unit of a product, okay, or 1 second. See, dynamic concept, I will give you an example. See, now by using 2 units of a raw material, we are producing 1 unit of finished good. Okay, so this is completely manual. No machinery, nothing. Okay, so now 2 units of raw material is required to produce 1 unit of finished product. Now, if I go for a modernized machinery, if I buy some machinery, completely automated kind of, okay, now if I buy a machinery completely automated, if I go for a technique, maybe it is saving my wastage. It is saving wastage. That is 1 unit of raw material, if you give it as an input, it is giving you 1 unit of output. Now, so for 1 and 1, if you are achieving 1:1, you are achieving, then you can satisfy more and more human wants. No? Same resource you are using. So instead of 1 unit, you can now in the same place you can produce 2 units. So that is dynamic concept. So you can bring in so many modern changes or modern technology of doing the business, and with that you can achieve many things, and you can even satisfy more wants with the available resource. Before, if you are satisfying only 2 wants, now you can satisfy 4 wants. Why you are not considering that? So that is dynamic concept they have not considered. So that is one more criticism. Okay, next, that is about Lionel Robin definition. Next we will go to the last definition, that is growth definition. So this is given by Paul Samuelson. So P.A. Samuelson. So we will see this definition was given by James Keynes and Paul Samuelson in the book written by Samuelson, that is Economics and Introductory Analysis, in 1948. So this is more recent compared to others. So in this book he gave a new definition, another definition he has brought it, that is Samuelson has given another definition in his book. So book name and year please remember. Okay. So now we will see the definition, what it says. Economics is the study of how men and society choose, with or without the use of money, to employ the scarce productive resources that would have alternative uses to produce various commodities over time for distributing them for consumption now or in future among various persons and group in society. It analyzes the cost and benefits of improving pattern or resource. So here we are talking growth definition. Mainly Samuelson concentrates on future generation. See, he says it is economics is not only considering what you want to consume now. See, whether you are spending money and consuming resources or without spending money or consuming resources. That means, for example, water. See, now you are paying money for water also, but I am just taking an example. Okay, there are lakes, you go, you use the water, you need not pay any money. But if you just see to it that okay, but there is lake, you use, consume water and take care of the lake, you protect the lake, fine, that is a good that's a good thing what you are doing. But in that lake, once when there is summer, you completely start constructing the building on that. Then what happens? You have a building, you have consumed, you have cleared that lake also, there is no lake now and there is no water. What are you going to give to the future generation? Maybe water you have consumed by paying money or by not paying money. That is not the point here, or that is not the question here. He says, Samuelson says, see, we know we have limited resource and we know that those resources are having alternative uses. And when we know limit, and we also know that our wants are unlimited, when we know all these things, and then also if we consume by paying money or not paying money, that's okay. But if you consume everything now itself, and if you go for the future generation, people are coming, no, next generation, what are you going to give it to them? What are you keeping them as a reserve? Everything now you only consume, you only use it. What is that you are keeping for them? So the economics tells us that, okay, what is that we are consuming now, keeping in mind wants are limited and wants are unlimited and resources are limited and resources are having alternative uses, plus you are using that resources whether by paying money or not paying money, you are satisfying your wants. All these things we understand, but economics will also tell us what is that we are keeping for the next coming generation. We are concentrating, or we should concentrate on them also. That is what economics is teaching us. Not only consuming now only, or not only prioritizing everything and going. What is that you are keeping for the future generation? What is that you are passing it on to them? So that is growth definition, or that is what economics is according to Samuelson. So main points what it says is, like scarcity definition, he is also accepting that unlimited wants and limited resources which have alternative uses. See, that point he is also agreeing. Yes, unlimited wants, limited resources, and each resource is having alternative uses. According to Samuelson, the problem of scarcity of resources is not only confined to present but also to the future. It means he introduced the concept of time element. See, he introduced the time element here. So he said, see, you can't only think of yourself. So scarcity definition, he stopped there only. But Samuelson took it further more, or took it to another step, where he introduced a time element, and he said, see, if you are only concentrating now, okay, now whatever resources I have, I will consume, I will prioritize, I will consume, and I'll go. What is that you are doing for the future generation? That is economics. Economics should concentrate on that. That is what Samuelson said. So he also adapted a dynamic approach to the study of economics, considering economic growth as an integral part of the economics. So he introduced a dynamic approach for the economic growth. That means it is not only consuming and going, you should also develop. Like if there is one lake, you protect it and also develop another lake. If there is one tree, plant another tree. So that is how you have to grow. And this definition includes Marshall's welfare definition and Robbins' scarcity definition. So if you observe, it is like combination of welfare and scarcity definition. He talks about welfare of the people, not only present generation but also future generation welfare. Okay, welfare, and then he talks about scarcity also. So he used the concept of both these definition and he gave his own definition, that is Samuelson. Okay, these are the different definitions of economics. Now we will just see scope of economics, that is traditional and modern approach. So we will just do it, and today's class we will complete with that. So first we will see scope of economics, how it was before. Traditional approach, what is the scope of economics? Modern approach, what is the scope of economics? Okay, so first one, traditional approach, economics is a social science and it studies man's behavior as a rational social being. Okay, so economics is social science and his rational social being. See, it studies the man's behavior as a rational social being. That means rational means when we say you are rational, that means you can take a decision like what is good and what is bad. That is rational. So rational means that only what is good, what is bad. You are in a position to understand. So as a economics is a social science and it studies the person's behavior as a rational social being. Okay, so you are rational, you can understand what you want, what you don't want, what is good for you, what is bad for you, and for you as well as for the society. So in that manner we will understand a person's behavior, and it is considered as a science of wealth in relation to human welfare. So traditional approach, if you see, rational judgment of a person, then wealth as well as welfare, both we are considering, and wealth was considered as a means to an end and the end being human welfare. See, in traditional approach, if you see, wealth is important. With wealth, what is that you are achieving? Ultimately you are moving towards welfare. That is what we study in traditional approach. So wealth is a means to achieve welfare. So the scope of an individual, either as a consumer or you as a producer, can optimize his goal in an economic decision. So you can optimize your goal. That means if whatever you want to achieve, you can optimize. Optimize is what? Optimizing thing is reducing the wastage, trying to achieve more and more efficiency. So you take decisions in your business in such a way, maybe as a consumer, if you are taking a decision, you would like to spend less and buy more. As a producer, if you have to take decision, you would like to use less inputs and get maximum output. So as a consumer or as a producer, his goal is an economic decision, and the scope of economic lies these 5 points are traditional approach. Okay, so this is wealth was considered as a means and an end to achieve the human welfare. So this is a traditional approach. Now we will go to modern approach. Sorry, I did not tell modern approach. So we will go to modern approach. In modern approach, what we are considering, first point is an individual, whether you take it as a consumer or as a producer, you can optimize the goal. What you are optimizing your goal is an economic decision. That means in modern approach, we are considering both producer as well as a consumer. As a consumer, what economic decision you are taking? You will spend less and take more products. Okay, consume more products. And as a producer, if you use less inputs and try to achieve maximum output. That is modern economics or modern approach. The scope of economics lies in analyzing economic problems and suggesting policy measures. See, these suggestions and all you did not come across in traditional approach. See, scope of economics you can understand from two approaches, older one that is traditional, and now the modern. So in modern approach, if you see, you are understanding and analyzing a problem and you are trying to move towards a proper solution. So social problems can be explained by abstract theoretical tools or by empirical methods. So you can social problems can be explained by abstract theoretical tools. That means abstract theory, like poor becomes poorer if there is no proper distribution of wealth. Poor becomes poor, rich becomes richer. So this is just abstract theoretical tools, or by empirical methods. See, empirical method means actual experience is there. based on actual experience or based on actual demonstration analysis, you take some decision. That is empirical method. Then in classical discussion, economics is a positive science. It seeks to explain what the problem is and how it tends to be solved. In modern time, it is both a positive and a normative science. If you observe, in olden days, people used to concentrate more on telling economics as a positive science. That means whatever they say as it is, we have to follow. That's all. Economics will not tell how it has to be. Economics will not suggest things. Economics will just explain things, and as it is we have to accept. But in modern approach, if you see, scope of economics is not only limited to positive approach, it is also taking a normative approach where it is telling this is how it is, but this is how it has to be. So economists of today deal with economic issues not merely as they are, but also how they should be. So now economists, if you see, and their suggestions, if you see, they say, see, this is how it is as of now the situation, but it should not be like this. There should be some changes. So this is a modern economist, what they are doing, or how they are dealing with the modern problems. And welfare economics and growth economics are more normative than positive. See, if you take welfare definition and growth definition, that is the second and fourth definition, if you take, they are more towards normative rather than positive. Even though traditional approach was more towards positive, but now if you take welfare and growth definition also, they are more of normative rather than the positive. Okay, so this is about scope of economics. We have seen definition, we have seen the scope of economics, subject matter of economics. So with this we can end today's class, and the next class we will start with macro microeconomics. Okay, thank you.